You know, behind every single business, every product you buy, every service you use, there's a story being told. Not with words, but with numbers. It's a story of wins, losses, risks, and big opportunities. Today, we're going to learn how to read that story. We're going to demystify the language of business itself, accounting.
Okay, so let's start with the most fundamental question there is. Forget spreadsheets and all the complicated jargon for a second. How does any business, whether it's a giant corporation or just your local coffee shop, actually know if it's succeeding? How do they, keep score?
All right, let's make this super real with a simple example. Picture this. Someone decides to start a new stationery business. To get things off the ground, they invest 200,000 rupees of their own money. This is day one, the starting line.
Okay, now let's fast forward through their first month. Business is pretty good. They sell a bunch of stuff, and the cash coming in from customers adds up to 147,000 rupees. And at the end of the month, the shelves aren't empty. They've still got 15,000 rupees worth of pens, notebooks, and other supplies just sitting there, ready to be sold. That's a good thing. That's an asset.
But of course, you gotta spend money to make money, right? The actual cost of all the goods they bought to sell in the first place was 115,000 rupees. So we've got to subtract that from the total.
And that's not the only cost. We also have to factor in the other expenses, like the 5,000 rupees they had to pay for the shop's rent for the month.
So when you run that simple calculation, you take the sales, add the value of what's left, and then subtract the cost of the goods and the rent, you get this number. A surplus, a profit of 42,000 rupees. This is the result. This is the score the business owner needs to know.
And that little bit of math we just did, that simple act of tracking what comes in and what goes out, that is the very heart of accounting. It's the beginning of a powerful system, one that's been developed over centuries, all to systematically measure these kinds of activities and turn them into useful information.
And honestly, the absolute best way to think about this whole system is to see it as a language. That's really what it is. It's the language that businesses use to talk about their performance, their health, and their future. And if you can understand it, you can understand the real story behind any company.
Now, I know this formal definition looks a bit dense, and yeah, it's from 1961. But the magic is in the verbs. It's all about recording transactions, like our shop owner's sales and rent, then classifying them into useful groups like income and expenses, then summarizing it all to get that final number, or 42,000 rupee profit, and maybe most importantly, interpreting what it all means for the business going forward.
People often use the words bookkeeping and accounting like they're the same thing, but they're really not. Think of it this way. Bookkeeping is the recording part. It's just getting all the numbers down correctly. It's the foundation. Accounting, on the other hand, takes all that raw data and turns it into a story. It analyzes and interprets it. So bookkeeping is like learning the alphabet. Accounting is writing the literature.
And this slide right here lays out that whole journey, that whole process. It all starts with recording one single sale or expense. Then it gets classified, summarized into reports, analyzed for trends, interpreted for meaning, and finally communicated to the people who need to know. It's a complete information pipeline turning raw data into real insight.
Now, you might think this is all some modern, complicated invention, but nope. This language we're talking about is ancient. It's a practice that has evolved right alongside human civilization and trade for literally thousands of years.
Just look at this timeline. We're going all the way back to 4000 BC, where Egyptians were keeping detailed treasury records. The Romans used daybooks to track what came in and what went out. But the real game changer, the moment that defines modern accounting, came in 1494. That's when an Italian friar named Luca Pacioli documented the double entry system, which is the foundation for everything we do today.
Pacioli's core idea is this. Every single transaction has two sides. It's a beautiful system of balance. So, when our shop owner paid 5,000 rupees in rent, their cash account went down by 5,000, but their rent expense account went up by 5,000. One entry shows where the value came from, and the other shows where it went. Perfect balance. So once this whole financial story is written down using that balance system, who's actually reading it? Well, you might be surprised by just how many different people are relying on this information to make some pretty critical decisions.
So yeah, who is the story for? The audience for these financial stories is incredibly diverse. It is not just for the boss or the tax collector. Let's break down who's actually paying attention and, more importantly, why.
First up, you've got the internal users, the people inside the company, the ones running the show. Management needs these reports to steer the ship. Are we making enough profit to open a new location? Do we need to cut costs somewhere? The numbers give them the answers to make those big strategic calls.
And then you have this whole crowd of external users looking in from the outside. You've got investors who want to know if a company is a good bet. Lenders, like banks, who need to know if you can pay back a loan. Even customers might take a look, especially if they really rely on that company's product. Pretty much everyone has a stake in a business's financial health.
Okay, so as powerful as this language is, it is absolutely vital that we understand its limits, because it doesn't tell you everything you need to know about a business, not even close.
I mean, just think about it for a second. How do you put a rupee value on the loyalty of your best employees or the trust that your customers have in your brand? You can't. Financial statements don't capture the skill of your team or the strength of your reputation, even though those things are often a company's most valuable assets.
So the key takeaway here is that we have to be smart readers. Accounting gives us a clear, structured financial story based on what can be measured in money. But it's just one perspective. It is an absolutely essential part of the picture for sure, but it is not the entire picture.
And that brings us full circle, back to this idea of a language. Because if accounting is the language of business, it's a language we can all learn to speak, even in our own lives. And it invites us to ask a really simple but powerful question. What story is your money telling about your goals, your decisions, and your future?